What's up, family? Welcome back to my YouTube channel. My name is Edwin and I'm your host for this channel. For those who are new here, remember to hit that subscribe button, like this content, leave comments down below for me to go back and go through them. And for those who are returning subscribers, thank you for always sticking around. So in today's video, I'll be explaining further on money market funds and fixed deposit accounts. So remember to stick till the end of this video. Carry your notebook and your pen, take some notes and learn something from this lesson, okay? So let's jump right into the video. So as I said earlier in the previous videos, for those who have watched my content, money market funds are low risk investments where you can invest your money and watch your money grow on a daily basis based on compounding interest. Now, for you to open a money market fund, I said you require a few documents, and these are the documents that you require. You require your national identity card or a passport. You also require a Kenya Revenue Authority private identification number. You also require proof of banking details, okay? A banking account. So you are required to submit maybe your bank statements or your bank number, okay? You also required passport sized photos and maybe a next of kin person in case of anything, okay? Now, in most money market funds here in Kenya, you're required a minimum initial investment of 100 Kenya shillings, just 100 Kenya shillings for you to open a money market fund here in Kenya, okay? Now, interest is offered per annum, but remember, the interest rate in a money market fund is market driven, so it fluctuates on a daily basis. It varies on a daily basis because of the variation in the market industry, okay? So for instance, you could be offered, let's say, a 12.5% today on your investment amount. Then coming to the following day, which is tomorrow, you realize that this interest rate has maybe lowered or moved upwards. So this interest rate varies on a daily basis because of the market. So that is the difference between these money market funds and a fixed deposit account. Now, let's move to a fixed deposit account. A fixed deposit account is offered mostly by banks, and these investments have a fixed interest rate, and it's offered based on four categories. Number one could be monthly, quarterly, which is for every 3 months, or semi-annually, which is for every 6 months, or annually. So let's assume you've been given a 10% per annum interest rate on your fixed deposit account investment amount, right? So if you decide to maybe withdraw this money semi-annually, which is after 6 months, this 10% will be divided by 2 because it's for the entire year, the 12 months. So if you withdraw in 6 months, you'll get a 5% interest for that 10% interest per annum, right? So let's say you decide to withdraw quarterly, which is after 3 months. So it will be 10 divided by a quarter, which is 2.5%. Hope you understand, right? So this is the difference. And for fixed deposit accounts, they are regulated by the Central Bank of Kenya because they are offered by banks. But money market funds are regulated by the Capital Market Authority. So you see different bodies of regulation, different interest rates. In money market funds, you can withdraw your money at any given time, mostly within 2 business days. But for a fixed deposit account, you'll have to wait for this time to mature for you to withdraw your money with the interest. But in an event where you withdraw your money before the agreed time of maturity, you will not be guaranteed to be offered the interest. So you're going to just receive your initial deposit with no interest on top. But if you wait for that time to mature, they'll give you your initial deposit plus the interest rate agreed upon your investment. So for those who have any questions, remember to reach out, like this video, subscribe to my channel. Let's meet on our next video.